Basics. I'm Lisa, and in this third episode, we're talking to you about how to choose an equity fund. Did you know that there are almost 300 different equity schemes in the domestic mutual fund market? Now, we're not talking about sector funds or passive funds like index and ETFs, or even the overseas feeder funds. We are talking about pure, diversified, actively managed equity schemes. Close to 300. And out of these, you need maybe 3 or 4 of them and not more than that. Every equity scheme has anywhere between 30 to 60 stocks in the portfolio. And if you have 3 or 4 different schemes, already you're looking at 200 plus stocks in your portfolio. So that's a lot, and you really don't need more than that. The key is in choosing the right funds or choosing the right schemes. How do we go about doing that? So this is going to be a very interesting analysis and research that you need to indulge in. And let's start where we would for any choice, right? By elimination. Actually, capital markets regulator SEBI ने हमारा काम थोड़ा आसान कर दिया है. SEBI came out with the categorization guidelines for mutual funds about 3 years ago. और उसमें उन्होंने 10 कैटेगरीज डिफाइन करी हैं फॉर एक्विटी फंड्स. सो एनी एक्विटी फंड हैज टू फिट इनटू वन ऑफ द 10 कैटेगरीज. Obviously, you don't have to invest in all the 10 categories. You need to choose 2 or 3 categories which suit you the most given your long-term financial goals and your risk profile. अब ये 10 categories में से हम 2 या 3 कैसे choose करें? If you see, ये categorization हुआ है on the basis of market capitalization and style. Market capitalization में आपके पास 5 अलग categories हैं. There is large cap, mid cap, small cap. Then there is multi cap and large and mid. Multi cap category को हम कुछ 5-6 महीने छोड़ देते हैं because just recently SEBI changed some guidelines in that. Earlier, multi cap funds could invest in any market cap depending on their preference, depending on the fund manager's preference. But now SEBI has defined that they have to invest 25% each in large, mid and small cap. And that will require portfolios to be changed. So till that happens, let's not venture into multi-cap funds. We still have a lot of choice out there. Now, it's not very different choosing a large cap category versus small cap category. It's like investing in a large cap stock versus small cap stock. So, आप सोचिए like buying HDFC bank stock versus a RBL bank stock or an Infosys stock versus a Persistent Systems stock. So the risk return dynamic changes when you move from large to small cap. Risk is higher in small cap. There will be more volatility. At the same time, return expectation over the long term is also higher in small cap. But it depends, क्या आप उतना risk absorb कर सकते हैं? Are you okay with that extreme volatility? अगर market ऊपर गया, अच्छा हुआ, then obviously your small cap stock or fund will do better. But if the market crashes, are you ready to take that kind of fall in your capital? Same thing when deciding whether large cap fund versus small cap fund. If you're not very keen on the risk, then allocate a small portion to small cap funds and larger to large cap funds. Also, there are style variants. There is a value category. If you really want to go into that value segment of stock selection, then pick a fund from the value category where fund managers exclusively use that style in managing the fund. Then there is Contra Funds, where again risk could be higher. Focused funds which have concentrated portfolios, if that is what you're looking for. So decide which are the 2 or 3 categories that suit you the best and pick those. Now let's come to performance. Yes, returns are important. However, never ever choose funds based only on the last 1 year return. It is completely useless. It helps nobody. So what we need to do is actually assess and analyze performance over the last, longer period. So last 5 to 10 years. आप 5-year performance लीजिए and look at it in different periods of time. So 5-year performance today, 5-year performance a year ago, 5-year performance 5 years ago. That will tell you how the fund has done in different market cycles. And whether the fund has been able to beat its own benchmark despite the kind of market cycle it is in, and also beat, say, 70 to 75% of the other funds in its category. That if that is the case, then that is a consistent performing fund, which is may not be the top performer every time, but it is able to beat most of the other funds in the category, and it is able to beat its benchmark consistently over different market cycles in different periods of time. And this is a good indication of consistent performance and something that you should really look out for. From the 2 or 3 categories that you arrive at, when you do this performance elimination, then you will end up, believe me, there won't be more than 2-3 schemes in every category that show up on the top. And ideally, by the end of these 2 steps, you should have, say, 6 to 9 schemes which you like. Now comes the slightly more tricky part, which is analyzing portfolios. You do need to look at past performance to see the trend that a fund has set, but the current portfolio is important to know what to expect going forward. Now, when you're looking at the current portfolio, क्या आपको हर स्टॉक को जाके एनालाइज करना है? नहीं, दैट इज नॉट पॉसिबल. अदरवाइज आप ही फंड मैनेजर होते. वो फंड मैनेजर का काम है वो एनालाइज करके ही पोर्टफोलियो बनाते हैं. What you need to see is from these 6 to 9 schemes, if there are any portfolios which are kind of overlapping. अगर 60-70% of the portfolio of one scheme is similar to another scheme, then do not invest in both. उनमें से आप एक चूज करिए. Secondly, look at single stock allocations. अगर किसी एक स्टॉक में 8 से 10% की allocation है, तो वो क्यों है? It may be fine, fund manager has chosen it, so that's okay, but question it. Don't go in without questioning it. Is it such an extraordinary stock? इस market cycle में उस stock को अगर कुछ होता है, then that will impact returns of the funds quite significantly with a 10% kind of allocation. So always question that. Then look at the larger portfolio and see if there are lots of stocks, say 30 to 40% of the portfolio, which is invested in stocks that you've never heard. It's very simple. You can do a quick search on the name of the company and you'll know what the company does. And it's possible that you've never heard of a few stocks, a few companies, but अगर 30 से 40% पोर्टफोलियो का ऐसा है जो आपको पता ही नहीं कि कौन सी कंपनीज हैं, कौन से स्टॉक्स हैं, then again question it. It may be okay, ऐसा कुछ नहीं है, you don't have to know all the companies, but question it so that you are more comfortable with that portfolio. Once you've established your portfolio comfort, we look at fund manager. Fund manager who is managing the scheme is also very critical. What you need to check is whether the fund manager has been managing the scheme for a long period. That's a good signal because it shows commitment and conviction in the portfolio and also commitment towards investors. Secondly, see if the fund manager's own stock selection style is adequately reflected in the portfolio. And you can do this analysis simply by going through older interviews, TV interactions, fact sheet commentaries. It's all out there, published, available. You just have to do a little bit of homework. ये सब करने के बाद भी there is one last step, which is looking at the risk parameters. In the fact sheet, you will find things like the portfolio beta, Sharpe ratio, standard deviation. Have a quick look at all this. This will again not really tell you what the return of the fund is going to be like, but it will tell you what to expect. अगर fund के portfolio का beta 1.5 है, for example, versus a market beta of 1, then you know that returns will be volatile when you compare to the market. In an uptrend, आपको काफी return इसमें से अच्छा मिलना चाहिए compared to the market, and in a downtrend, maybe you will see quite a large drawdown in your fund returns compared to the market. So these are things that you need to be aware of before you start investing. I know it sounds like a lot, लेकिन क्या है ना, but if you're going to invest for the long term and you're going to put your money in for 5 to 10 years in an equity scheme, then might as well do the homework in the beginning. You have to review these choices every year, but also make sure that you start right. Only then are you going to be well and truly on the path to long-term wealth creation. Thank you for watching this third episode. Stay tuned. We have a lot more for you on MF Basics.